first, Google's eyeing this purchase of Wiz. So the
Yes.
issue here is that it's the biggest acquisition in Google's like history, the single purchase in Google's history, and it actually would have still been the single biggest one last year when they were looking to buy Wiz at like a 22 or 24 billion dollar valuation that Wiz walked away from. They decided, hey, let's go ahead. We think we can get more than that. Let's IPO. Let's get some private equity and see if we can raise our valuation. And they did.
I almost
They like
wonder if we can pull this up real quick. I found this chart to be incredibly insightful so that you can sort of compare all of Google's acquisitions over the past to how big this one really is. In 2012, they acquired Motorola for 12.5 billion, and even adjusting for inflation, that was a fairly massive acquisition. And of course, DoubleClick was a really big one at the time in 2007. They weren't really all that big of a company yet, and they had really taken this big bet on DoubleClick. But this is massive. This one, takes a big chunk out of their free cash flow, and of course, I'm sure that they're financing the deal in a number of interesting ways. But 32 billion is a massive valuation for a cybersecurity company. Maybe we can cover some of the concerns there.
Yeah, well, the actually one of the reasons why Wiz wasn't acquired in 2024, even though they thought they could get a higher price, was that it was also in the face of, from what I understand, in the Biden administration, there was this issue of mergers and acquisitions that they wanted to prevent, like antitrust issues and monopolies, and so like Wiz didn't want to like jump into that fray and spend who knows how much time and money and effort trying to navigate that, and so they stepped away. The thing is, that concern might still actually be there with the Trump administration, like for different reasons. The Trump administration seems to want to, and we'll talk about this a little bit more later on, decrease the divide between the top 50% and the bottom 50%, and along with that is this idea of preventing these mergers and acquisitions to cause even bigger and bigger corporations. The thing is that the Google's place in the cloud computing world is not high. I think they have like 12% market share versus like Azure and AWS, which really
Mhm.
takes the line share. And so they can make the claim that this acquisition wouldn't actually make them more of a monopoly player. In fact, they're an underdog, let's say, in this vein. So that might be the tack that they take. But what I find fascinating is that this is part of the. We've been talking about it for the last couple of months now. Google wants to be a big player within AI, obviously, and
Mhm.
they sort of like want to be in control or have a stake in the entire tech stack for delivering AI solutions to people. So they have the consumer services side of it where they're delivering this AI information, but they also want to be part of the cloud computing and infrastructure and all that. And Wiz, they're like, what is it? They serve like 50% of the Fortune 100 companies. That's one of the reasons they're so valuable. They've increased their revenues over the last year dramatically from like 500 million per year to like or projected to be a billion per year.
Right.
And so Google's decided, yeah, we'll even overpay. I think they're paying 100% premium on the valuation of the company in order
Well,
to
yeah,
help them
just
out.
to unpack that a little bit further, you mentioned that there was potentially some regulatory concerns about the first bid that they had in 2024, which was at 23 billion, but now they're revising the offer at 32, which is almost a 40% increase in the offer. And I realize, as we're talking tens of billions of dollars here, it doesn't sound like a lot, but that's a massive increase in the bid without a clear, substantial increase in revenue. If they are on track to do about $1 billion in revenue, even in 2025, which we're not sure of yet, I think that's sort of the goal, or at least the estimate that has been put forth. Uh, they're still paying 32 times sales then in that regard. I mean, that's a massive multiple for a company that they are taking effectively a big risk on to add to their portfolio of cloud offerings. How are they going to get this money back is my initial question. And obviously investors are also concerned about this.
So I was looking through it, like I was thinking, they might be concerned of what they will lose if they don't succeed in cloud and security and AI. Like what they will lose in that vein could be pretty significant. I mean, they could go the way of Yahoo if other things pick up above them. And they had promised like an $80 billion investment into AI every year for the next couple of years, and
Mhm.
I'm assuming this 32 billion is being peeled off of that.
Mhm.
Um, Plus, Wiz has like a particular type of service offering. Like one of the reasons they are outpacing even their competitors is that uh, don't quote me on the specific details, but they actually allow you to connect to multiple different cloud services. You're not like siloed into one thing, and so people feel like there's less of a shift when you're going there because you have access to actually more than just what one entity is providing you.
Hmm.
Um, and I was listening to the announcement that Google made, and I'm always looking for the AI term there. And because cloud computing and security and all that, yeah, totally understand why they would want to have that. But that AI component where they want to be there for the for the inference training, they want to be there for the training of the AI models, to be able to serve the proprietary models. Like they want this in part to serve themselves directly, not even as like a business to grow. They want that
Hmm.
technology for themselves. So it's actually been pretty interesting. There is when we take a look at the stock price, though, you'll notice that
Mhm.
the news did not cause really any bump at all in the stock price. Google stock price still stayed low.
I mean, on the day of trading, it definitely did not look good. I had
Right.
pulled up the chart myself along with Google Cloud's tweet on the subject, which looked a little concerning here. There was a bit of a pretty sharp pullback for the day, but you're correct. It ultimately found support for the next 3 trading days afterward. And this is starting to look more in line with the curve we're seeing in the S&P 500.
Right, so that means the market, in some sense, is not really betting on that this is like a great idea. Well, one, it might not even go through, right? So
Sure,
this
right.
this deal
Another
actually takes
risk.
place next year, and who knows if there's regulatory concerns there that they can actually move forward with that.
Mhm.
But if they can't, they have to pay out 10% of the acquisition, like $3.2 billion, as a well, oopsies, that didn't work fee to Wiz, which is, I mean, I would want to be on the Wiz side where I negotiated 3.2 billion. I don't have to sell anything. That's pretty GD
I'll
amazing.
take those deals all day long, and then
Exactly. And so the market's sort of like, well, this is really, I mean, the darts left your hand. It hasn't even hit the board yet, so we can't. They're not going to put money into that right now. There's also, I know the whole deep seek thing hasn't really um, hasn't really taken root yet. Well, first, before, let me just play this for you because this is someone who's talking about the idea of the difference between the proprietary LM models and then these open source ones. I thought that was particularly interesting. This is Kei-Fun Lee, who was talking about this, specifically targeting OpenAI. One second here. All right. You'll let me know if you can hear it.
In both US and China, the
Yep.
pre training of a giant model has consolidated and is consolidating. And it's become clear that open source will be the winner. There's still many that will not concede, right? OpenAI, Anthropic, who build their businesses believing they can build a better closed model than everyone else. I think they got shocked when they saw a model as good. If you think about OpenAI's costs of $7 billion of operating costs in 2024, DeepSeek probably operated with 2% the operating expense. So the issue really isn't whose model is 1% better. I think they're all very good. But the issue is OpenAI's model even sustainable, right? I mean, you're spending $7 billion a year, making a massive loss, and here you have a competitor coming in with an open source model that's for free. And that company also is infinitely lasting because this founder has enough money to fund it at the current level and has reduced the cost of computing by a factor of 5 to 10. So with that kind of formidable competitor, I think Sam Altman is probably not sleeping well.
Yeah, well, he.
So the uncertainty that's still around the whole AI space as far as the AI play is so much so that like the win has really been taken out of the sales, both in private equity and in financial markets,
Mhm.
as to like, okay, we get the hype here, but where's the edge actually going to be found? Where we actually recoup this money? What's the multiples we can actually place on this? People just don't know.
Yeah.
And we're seeing that also in Nvidia and AMD and all that. The stocks haven't rebounded dramatically.
Well, yeah, and I think it's also just difficult to figure out how to actually invest in efficiency. It ultimately ends up being an R&D question, rather than just saying, okay, well, the investment in hardware is a pretty clear objective and an achievable goal. All we have to do is buy more land, build more data centers, and buy more video cards, and just get them out the door, right?
That's right.
That's an easy one for investors to wrap their mind around. It's tougher if businesses are trying to capitalize a ton of R&D expense to go into try to improve the operational efficiencies of these models. And I think it's harder for people to rally around because it's so unclear whether or not we can really accomplish that. DeepSeek represents an obvious push in the correct direction and can improve in its operating efficiencies considerably. 2% of the operating cost is massive. I mean, that's most companies are looking for 10% improvements. So a 98% cut in operation costs, that's amazing.
It's
Um,
unbelievable.
and where we go from here is the obvious next question. As we've talked about in terms of the paradox, though, as these costs come down to actually operate, the demand is still going to increase for the use of AI tools. So the wash is still going to be kind of interesting to see how this plays out, because even though we might be able to cut the operating costs down, if the demand multiplies by 10 or two orders of magnitude, 100 times greater than what we experience today, and more of the general population is starting to use AI tools, I think you're still going to need that infrastructure in place. So to me, it's interesting to see where this trade-off is really going to take place.
Well, that's why I think the long Google play, as far as the trade is concerned, still basically makes sense here, because there's one other component, which is the national security component, where the administration has clearly made this like the AI and national security issue, and the stakes are so high for this technology and the application that it's nation states fighting against each other now with this. And so when you're seeing the 32 billion acquisition from Google, and if you like were to assume you know, a nod and a handshake from government, like we need you to do this. We need corporations to go out, American corporations to go out and actually become the big dogs. And don't worry, you're going to find your money on the back end. Well,
Mhm.
now all of a sudden, 32 billion in the context of the government is backing you seems like nothing at all. I mean, they'll spend 32 billion on, they'll lose 15 billion dollars and not realize where it is.
Sure.
And so if they're doing this play, it's a national security play, we should expect to see more of these sort of things. And you wouldn't necessarily have to worry about the downside risk to Google, because they would have access to, they would be pushed by the government in order to acquire more, to do more, to become bigger, and who knows what that might look like in the future. So if I wanted to play AI in a national security sense, then I would go to the biggest dog who's spending the most amount of money and the widest amount of field, and expect that to go up. But the fact that Palantir hasn't recovered yet, and that's also pure government play, I don't know. I don't know what to think there exactly.
I think the problem with Palantir, though, has always been that they're already just considerably overvalued, and it's very much a growth stock that you have to project out their future potential on in order to ever consider getting your money back on what you're paying a multiple for today.
Okay.
With Google, though, it's a little bit different. I think you're paying a more fair price for access to Google today, for shares in Google today, and the any potential upside that's perceived for this is largely going to be around how Google will continue to nail down, I think, larger Fortune 500 contracts. It should be fairly obvious that at this point that Wiz is really a solution that's meant for larger organizations that have security as a major concern. And so if Google's folding in this into their GCP offering, they're interested in widening their net for the Fortune 500 competition landscape. And that's obviously going to mean pretty decent revenue for them.
Let's take a moment to shout out TradersPost, the automated trading platform designed to take the friction out of executing your strategies. Whether you're trading stocks, futures, or crypto, TradersPost connects seamlessly to your broker or exchange, giving you the flexibility to automate your trades without missing a beat. If you're tired of being the bottleneck in your own success, it's time to let automation do the heavy lifting. Head over to traderspost.io and see how easy it is to streamline your trading. TradersPost, because your strategy deserves to run at full speed.